Thanks everyone for the warm welcome. It's really great to be here. Yes, I have come across from Melbourne. I've segued my holiday, so I have to say thank you to my partner who's ducked out somewhere, I think, who's gladly let us escape quickly and have a chat with you guys. Today I'm going to talk about some of the critical things that I see in business for game developer studios. This is a repurposed set of slides that cover off the top 5 things you need to know, which I presented at GCAP 2 years ago, with some added extras that hopefully you guys will find very relevant. By way of background, I am a partner in an accounting practice in Melbourne. I have been doing tax and accounting and general business work for the last 16 odd years now. I actually got into the industry by working with a small company called Blue Tongue Entertainment back when those guys were starting out in uni, and got to know those guys, and from there we've expanded our network, and obviously the scene in Melbourne has exploded over that time, and it's great to sort of see that's perhaps starting to happen over here as well. It's great to see so many people here today. So I'll cover off these items. Feel free to interrupt or sing out with any sort of particular questions along the way. If there's anything you want answered or you're not sure about, I'm happy to take them as they come. I'll leave some space at the end as well, so you can throw whatever general questions you like at me, and we can go from there. So the first thing, I'm going to have technical difficulties. There we go. The first thing that I think is really important is to understand there's a fine line within the industry between a hobby and a business. A lot of people start out in the industry because they're very interested in the creative side of it. And I think that's really important, and in fact that's one of the things that I love about the industry, the fact that there's such a creative interest that drives a lot of it. It's not all about money. But once you start making the transition into a formal environment, money does start to come into it a little bit. So I'd like to draw the distinction there between a hobby and a business. A business is something where your activities are planned. They're organised and carried out in a manner which is going to lead to some form of financial success. Now, profit, I think at times is a bit of a dirty word, but it's not necessarily a bad thing, because everyone needs to make money to pay the rent or the mortgage or feed yourself. Things that some people consider important. If you can survive on 2-minute noodles, maybe you can get by. So what does a business actually have? Well, it keeps records. It maintains a business bank account where it actually has the financial information of the business separate from personal activities. It'll often have certain licenses or qualifications that are relevant to a particular pattern of trading, and it may well operate from its own business premises. For some people starting out, that's a distinction from, say, working in your garage at home to coming and working in a space like this, which I think is very important, because you need to be able to draw a distinction between the two. As you step forward, it formalises and it becomes a brand name in its own right. It trades under a different name to yourself. I think that's an important distinction. It's really about getting serious and understanding that if you want to take that next step, you're going to need to treat it a little bit differently to how you perhaps got into the industry. See if here we go. Okay. Structure. So structure is really important. We spend a lot of time in the accounting industry talking about structure and how we can structure businesses for success. Predominantly the main structure that we see, and hopefully some of you in the room have used, is a company. So to talk specifically about that, a company is a legal entity. It's quite distinct from an individual, and that legal entity is formed under the Corporations Act. It's important that this separate structure is set in place, because what we're really looking for is to limit liability. Liability is when things go wrong, and they often do in business, unplanned events can sometimes have the misfortune of ending the business. I have seen this in the industry a number of times. I imagine a few of you, having worked in some of the bigger studios, have also experienced this. There needs to be a way in which we can minimise liability and ensure that you as individuals aren't personally at risk. At the moment, your biggest asset would be your ability to earn an income. Perhaps you've earned some money along the way and got a small amount of savings. We want to ensure that those two assets, if you like, are kept very separate. The asset being the business, the other being your other assets. So limited liability is really important. Now that's not to say go and run amok, run up debts and don't worry about it. There are rules around that obviously, but it will allow for adequate protection. We also use companies because we're IP. So this is quite common, particularly for guys coming out of AIE, where there's perhaps a disparate number of people that have worked on a project from different angles. You need to ensure that IP is housed in one location. We have seen unfortunate circumstances where perhaps someone has disagreed with the direction of a particular project and then said, well, I'm withholding my rights on that project. So one of the first things we do when we're setting up a company is ensure that IP is assigned into and transferred to the company so that that company then owns the IP. By consolidating that IP, you've then got the ability to enter into arrangements, legal agreements with other parties, and then the most common ones you'll see out there would be, your Apple, Google Store, Steam, those sorts of things, where you're going to need one vehicle to engage with that counterparty legally, and that vehicle needs to have access to that IP. So a company provides an anchor for that. The final point, which is a bit dry, I know no one really likes talking about tax or even listening about it for that matter. Companies provide a flat rate of tax. Now, it's a particular thing that's relevant to your industry, and that is that your income profile runs generally very flat. Then you have a massive spike, and then it drops back down and it runs flat again until you do your next release. Now, that can be problematic if, in a given year, as an individual, you're paying tax at marginal rates. You can find that your income will go rapidly up into top tax brackets and then drop back down for perhaps a year or even two if you're perhaps slow in development. So that's an important distinction to understand. A flat rate of tax means that regardless of what that spike looks like, it's a flat level playing field. There's one added element that I'll talk about briefly from tax and companies, and that is for those of you that are working in a technical space, that are doing a lot of perhaps more R&D focused development, where there's elements of what you're doing that is not just about the title but actually creating tech. There is the eligibility or ability to apply for what's called the R&D incentive, and it is mandatory that you're a company to access that particular element of the concession. So very, very important. Now I'm ploughing along. Has anyone got any questions on companies? Yes?
I had a bit of an interesting one in my eyes.
Yep.
Hopefully I can bring it back because I've just lost it for a second.
Right.
It was something to do with like earning the money as a company. If you run the company, essentially, the greater you build it, the more your income goes up. Because I was looking at that thing where you're saying it goes up
Yes.
as an individual. But as a company, you're talking about it potentially staying up there.
Not necessarily. What I'd be saying is that the revenue, the top line, if you will,
Yeah.
the income, will be spiky. So you'll see large spikes in income, and it is the nature of the industry, unless you get a particularly successful title that would have what I regard as a fat tail, so it tends to trickle down slowly.
Would you include deductions such as employee wages on that if you're a company opposed to as sole trader?
Absolutely, yeah. So both tax treatment works the same in that income is going to be offset by deductions, and you'll only pay tax on the net difference, if you like. The difference between an individual and a company is that the tax rates are going to vary. The company is going to be flat. The individual is going to be depending on the level of income that you earn in a given financial year. Yeah. So there's sort of an element of evening out, if you will.
Yeah.
What you find, usually expenses or outgoings, particularly in this industry, are very flat. You might have some lumpiness in development, as perhaps say you need an artist. If you don't have an artist on the books and you engage a contractor, then you might see that. Anything else?
Just to clarify, flat rate of tax means no matter how much the company's earning, they're paying the same
percentage
of tax.
Correct.
What percentage is that?
It's just come down. It was 30%, and it's down at 27.5% for most businesses, or most companies. Yeah. Yeah. Yes.
At what point would you suggest establishing a company? So, say if you're setting up as a sole trader, releasing a few games on the App Store as a solo developer, just seeing if anything sticks. At what point would you switch over to a company structure?
Look, that is probably the most common question I get. So when do you actually form that structure? Look, I think preferably the earlier the better, and the reason for that is that you want to ensure that you're capturing as much of the IP in that bucket, so to speak. You generally, certainly well before you start earning income, because the difficulty we often have is if someone takes IP, a successful title, and then introduces that from themselves holding that to a company, that's a transfer and disposal of IP and will trigger capital gains tax. So you can imagine that if you've got the next Crossy Road on your hands, for example, and you come at it a little too late, that IP can suddenly be worth quite a lot. Yes?
How many people can you have for that flat rate?
As many as you like, yeah. So a company has generally got a number of parties that are involved. It'll have directors and it will have shareholders. The shareholders are essentially those people that will receive the income, they'll benefit from the profit that remains after costs. And the directors are the ones that have responsibility for the structure, and they're the ones that run it. So there are scales of companies. It's probably a little beyond the scope of today's conversation, but generally you can have up to 50 individual shareholders in one private company. If you go beyond that, you start getting into a different type of company. It's a public company then, and there's different rules and essentially regulations that apply. Anyone else? Yes?
Just wondering if you have any views on other organisational structures, like cooperatives, for example.
Yep.
And some of the benefits and switching over to those, because I imagine a lot of people would be starting companies and everyone's coming in with the same amount of equity into the company, and so having a structure where everyone has equal ownership has its benefits.
Yes.
Then on the flip side, I imagine some of these things like the R&D tax offset you mentioned is only geared to work with companies, not cooperatives. I wonder if you have anything to add or any experience.
Yeah. When we talk about cooperatives, and that's a really good question, generally what happens when you start out is that people are in these, what you're terming a cooperative. We regard it as a partnership for tax purposes. Now, the terminology is largely indifferent. Essentially what happens with a partnership is that there is unlimited sharing of risk between all parties. In that if one person does the wrong thing, then everyone can be tainted by that risk. So generally what we try and do is make the transition into a corporate structure where we can protect individuals as well as consolidate IP and create that counterparty. You can do it with a partnership, and in some circumstances where the risk is perceived to be very low. I can agree that in this industry risk is often low, but having said that, things can and do go wrong. So I think at some point you generally will want to make the transition to a company. You can deal with different levels of shareholding. You don't have to have the same percentage, and that's often the case if different people are contributing at different levels. So there's different ways you can approach it and tackle it. Yeah, does that answer your question? It's sort of a...
That's all right. That's good. I didn't have a specific question. So
yes.
General thoughts.
Yeah. There is one other structure called a trust. Trusts, it's a little beyond today again. We generally stick to companies, A, because of the flat rate and access to the R&D incentive. And that's the main driver. Yeah. Okay, I might push on. So, just talk briefly about registration. So, starting to get a little bit drier, but it's important you understand what all these different acronyms are. In the accounting world, there's hundreds of thousands of acronyms, and we get used to them, and that can be a little bit daunting coming out. So, with a company, you're generally going to have, company or a partnership or whatever you choose, even a sole trader, you're going to have a number of these registrations in place. Most people in this room, I imagine, will have a tax file number. If you have a company or a partnership, you will have a separate registration for that. That is your unique identifier with the ATO for income tax purposes. An ABN, again, if everyone's in business, they will have seen this. This is a little bit more difficult to get. It's an Australian business number. You'll generally need that when you're trading within Australia and dealing with other counterparties. Particularly important if you're paying someone, you need to cite their ABN, because if you make a payment to someone who doesn't quote their ABN, you're obliged to withhold at the top marginal tax rate, being 47 cents in the dollar, from any payment you make to them. And if you don't do that, you're still obliged to pay it to the ATO if they ask the question. So be very careful about that. Look for ABNs. An EIN. So an EIN is typically going to be required where you start registering on some of the international platforms. Particularly Apple will ask you for an EIN. It's a IRS registration, a US registration, and it's essentially a number that identifies your particular company as an international party under the terms of a double tax agreement. The main reason it's important is that if payments are coming out of the US and they can't cite your location and the particular clause of the double tax agreement that applies, again, they're required to withhold from you. So you'll find anyone that's registered for Apple or Steam will have gone through this process, and you'll need to quote that on a W8 Ben form to the party that you're dealing with. You've done it before?
Yeah.
You've seen it, yeah.
W8 Ben.
GST is one of these interesting topics that people have an option to either participate in the system or choose not to generally. So the mandatory registration threshold is $75,000. If you're dealing with Apple or Steam, you're going to be required to register for GST. It's one of their contractual terms. If you're earlier in the process, you don't generally need to register for GST. That turnover threshold of $75,000 is really going to only come into play if you do really well in a particular release. So just keep that in mind. The reason why people register for GST, aside from the mandatory element, is that you can recover the GST you spend on expenses within Australia back from the ATO. So registering for GST early is actually sometimes a good strategy, particularly if you know that you're going to incur a lot of costs. So keep that in mind. The downside to GST registration, of course, is that you have to go through the process of filling out a BAS and keeping track of all these records. So that's one thing just to keep in mind. There's a bit of a balance up there. You got a question?
Well, yes and no-ish. I went to tax accountant and he said I was illegally getting paid because I was getting paid GST and I wasn't registered for GST. But he said what we can do is backdate everything back to the starting point in which I started the business.
Yes, yes. There's an interesting misunderstanding about GST, and that is that a lot of businesses will just assume that you're registered for GST. When you're actually registered for GST, you hand someone a tax invoice that says, these are the amounts that I'm charging, and this is the amount of GST, being 10% of my invoice that I'm going to apply on top. It's only then that you would charge GST. The reason that they've often done that is because they're looking at the amount they're paying you and determining, well, wouldn't it be great if we got 1/11th of that back as a GST credit? Now, they're not actually legally able to do that, but some people just do for whatever reason, perhaps a misunderstanding on their end. Yeah. So if you are registered for GST, you are required to provide a tax invoice. There are ways around that, what's called a recipient-created tax invoice, where the person paying you completes that. But there are certain requirements that are in play for that to work. One of them being obviously that you yourself are registered and you make a positive confirmation that that's the case.
Registered and it was a recipient created invoice because they created it on my behalf.
Yes, that's right. Yeah. So it would be an invalid creation in that case. Yes?
When you said GST for the company, you said 75,000. Was that net value or gross value?
That's a turnover. Yeah, gross turnover.
Right.
Yeah. Yeah. So you can do it. Well, you're going to be forced to do it at some point.
Yeah.
Anyone else on GST? That's a bit of a confusing topic. Yeah, we're good? One more?
You didn't say what it was.
Goods and services tax. My apologies.
Oh yeah, what does the IN stand for?
That one, I actually don't know the answer.
No.
Yeah.
Something international number.
Yeah, yeah. It's something, identifier number it might be.
Oh.
Anyway, it's an EIN. Yes.
Just with the EIM, was that just specifically for the United States, as you just quoted Steam and Apple, so it's just for the United States number? Yeah.
Predominantly. What you'll find is the vast majority of platforms will deal through the US as a central point. Yeah. I have seen its occasional circumstances through the Eurozone, but very rare.
Right.
Yeah. So most of the major platforms that you work with, generally. I'll touch on the last couple of acronyms really quickly. PAYG, withholding, and FBT, they're applicable where you're employing someone. Okay? So PAYG withholding is, everyone's probably experienced this if they've worked somewhere. There's taxes that are withheld from your earnings. That's PAYG, pay-as-you-go tax. FBT is fringe benefits tax. That's if someone gives you something physical because you're an employee. So just because you're paying someone in some non-cash benefits doesn't mean you get out of tax. So it's important to understand that fringe benefits tax is a bit of a sleeper. And it can be very easy if you, say, want to pay for someone because, say, you love the work they've done and you say, great, I'm going to send you off on a holiday overseas. Well, that will be fringe benefits tax that will be applicable to that. So just be aware of that. Okay. I think it's important to touch on the fourth point here being the difference between employees and contractors. Now, this is, again, a bit of a problem we see within the industry. There's a presumption that everyone can simply be a contractor. Now, that's not always the case, and there are very important, dare I say it, rules that apply here that you need to be very conscious of. Rules that are set in place to ensure that people aren't taken advantage of. So the distinction that I'm put on it is that an employee is someone who works within your business, as opposed to a contractor who runs their own business. Now, there's obviously a lot of nuance in that. So you can draw into the detail here and try and thin it down to these points that I've put up on the screen. So what is the ability or the individual's ability to subcontract that work out? So does the agreement say, I can take this work that I'm obliged to perform under a contract, but I don't personally have to do it. I can employ someone myself to do the work, or I could perhaps subcontract the work. How restrictive is the terms? You can imagine as an employee, well, I do recall a case in the US where someone was farming their day job out to India, but it's pretty unlikely for you to be able to just say, look, I'm not going to turn up, but Joe, who's a good mate of mine, is going to come in and do my shift today. Very unlikely that's going to be acceptable. The distinction that's often used is a time worked versus a value proposition or a result. So an employee is someone who's going to work a particular number of hours during a day, and what they get done is what they get done, as opposed to a contractor who'll be tasked with production of, say, X amount pieces of art, or can you do this particular line of code? As long as they take is required, essentially, is how it will work. So the control and the capability to deliver the result is entirely rested with them. An employee will only provide labour. A contractor will generally provide all things necessary to complete the job. It may be software, it may be hardware. Now, there's obviously a blend between the two that will occur there, but you're generally going to be more likely to be an employee if the sole thing you deliver on the day is your hours. Who bears the commercial risk? This ties back into the result element I was talking about earlier. So, if something was to go wrong, who's obliged to fix it? With an employee, that person will just keep working. Maybe they get slapped on the hand and told they've done the wrong thing. But a contractor will have will have the responsibility to correct the mistake. Control over the work. Again, this touches on this element of, well, when does the work get delivered? How is it delivered? What are the mechanisms? An employee will generally be located in an office under supervision. And that plays into an independence element. There's a freedom with a contractor to determine when they're going to do the work. They may have multiple clients and they're working to a particular deadline or a timeline, but that doesn't necessarily mean that they have no independence. Now, the reason I raise this is because the big mistake that I see happen quite regularly is a presumption that just because someone has an ABN, they're a contractor, and we can contract out of our obligations for things like superannuation. The superannuation rules, the SGC rules, very specifically address the period of time when a contractor who's working within your business may be regarded as an employee. Even in general law, they're able to step outside of the Fair Work restrictions. So I'd encourage everyone who's engaging contractors to have that conversation with them. The better result is that you err on the side of caution. You protect yourself by saying, well, look, should we be paying super on the remuneration that we're going to pay for this work? And at the very least, if you are ensuring that you want to treat them as a contractor, I suggest you go onto the ATO website. They have a nifty tool there that will allow you to actually determine from the SGC perspective whether a contractor is going to be deemed to be an employee. Run through that questionnaire, print screen it, save it as a PDF, hang on to it, protect yourself. Any questions there?
What is that time frame then, or is it flexible in regards to how long you have a contractor on before you should be paying them super, or you just consider them an employee?
Well, the time frame is an interesting one because technically you can employ someone on a very casual short-term basis. It could be a fixed casual employment agreement that works only for a couple of weeks. So there's not necessarily a time factor in there. I would argue that the more a person works in a business, the longer term they are, particularly if they're entrenched within a business, the more likely they're going to be under direct supervision. They're going to start to exhibit some of those facets of an employee. Short-term contract arrangements, it's often very easier to, if you know what the output's going to be, simply contract and agree on the output and the responsibility of who's going to deliver that, and just leave it at that, and leave the hours out of it. You can estimate a fee based on hours, but I would step away from any sort of recognition in that regard.
Yeah, just like for example, like with my experience, like I've
Yep.
worked as a video game journalist, and
Yes.
that's often considered in regard as from media outlets such as contract work. And
Yeah,
often
yeah.
it's not time; it's a result, as you say out there.
Yes.
Well, I'm about to do a long contract period of work for a game developer.
Yes.
But it's in New Zealand.
Yes.
And in a lot of ways, I'm going to be functioning pretty much as an employee, but somewhat as a contractor as well, where like
Yeah.
you say, it's entrenched very much within the studio. So
That's right.
Yeah, so it's
And that is the challenge, because it isn't a black and white position at times. I think you do have to explore it and put some thought into it. What we're talking about today is obviously from an Australian perspective, so I wouldn't know from a New Zealand perspective.
Yeah.
I imagine it's probably similar, but it's probably something that's worth inquiring over there. Anyone else? Yes.
What about volunteering?
Volunteering is an interesting one because now I'm not an employment lawyer, so I have to caveat that by saying up front you should always get employment law advice. My understanding of volunteering or internships is that you can undertake or have someone come on as an intern, and they can participate within the business, but they can't contribute to any output that the business is going to be using. So in the accounting industry, I couldn't get an intern to come in and do a tax return for yourself and then charge you for that work, is my understanding. But it's a distinction that, as I said, I'm not an employment lawyer, so I encourage you to seek that advice out. Yeah, a lot of the people that will facilitate internships will have advice on that particular issue. Yeah. Anyone else? Okay, we're good. So, step 5, here we go. Financial management. So, one of the important distinctions that I see between those businesses that are successful and those that tend to just peter along is that they treat the financial management of the business quite seriously. So as I said earlier when we were talking about the distinction between a hobby and a business, they've solidified that thought in their mind that they are running a business for profit. They're keeping it very separate from their personal expenditure or their personal consumption, and they're running a separate bank account that keeps track of all the comings and goings. They're serious about tracking and monitoring their financial performance. So they're talking about, well, how successful is this title at the moment? How long have we got with the cash that's on hand to meet and pay everyone's obligations? What's our burn rate? Being the outgoings per week, per month? And how long does that give us? What are we doing about seeking out financial assistance, whether that be grants or perhaps investment? Talking to people about those aspects, it becomes really important, because then you're not running along blindly. I've seen a large number of studios essentially running on an indefinite development time frame with no real regard for the need to actually complete a project and move on to the next one. Now, I get that this is the challenge. The hard-nosed business bit crashes into the creative element, right? And that is an unfortunate distinction, but the reality is that from a financial perspective, a project cannot be running indefinitely. I think everyone can agree with that. Generally, the most successful businesses will actually appoint someone as, now I've used the term CFO, Chief Financial Officer. Look, you can be as formal about it as you like. There's generally a person who's going to be taking responsibility for maintaining the books, keeping an eye on the finances, perhaps doing some of the budgeting, talking to wonderful people like accountants, maybe lawyers, and generally trying to keep track of what's going on within the business. And the last one is, I would encourage everyone who's setting out in a formal sense to be using some form of accounting software. The reason we use accounting software is because it makes your life easier. When you have to comply with things like income tax, BASs for GST, particularly payroll, if that's something that you're doing, you want to make your life easy. No one wants to be sitting there crunching over spreadsheets. Use a piece of accounting software. The one that we most commonly see, I'm sure everyone's heard of, is Xero. There's obviously a large number of other products out there in the market. We would encourage a cloud system solely because it provides access to that information to an accountant like myself, so that if you've got a question, you can just ring up, I'll log in, we'll see what's going on, and that way we can fix it.
Zero.
Yeah, XERO.
Oh, XER.
Yeah. Yeah. There are other ones. There's everyone's obviously heard of MYOB. That's been in the market for a long, long time. That's a bit clunky. I don't really like it. Yeah. There is a cloud platform for it though. There's also some cheaper ones. QuickBooks, which is a US product. It's not bad. It's about $20 a month from memory. Look, and they're all going to have a cost, unfortunately.
Start off with QuickBook isn't too bad, is it?
Yeah. Look, I think it does the job. Yeah. Yep. What you're really looking for, look, you want to play with it, because I think at the end of the day, you're the one that's going to have to use it. All of these ones are going to have some important features like cloud access. They're generally going to have bank feeds so that it'll push bank data into the software. Makes life a lot easier. You don't have to key stuff in. They'll have payroll platforms that will allow you to calculate things like super and PAYG. Particularly important because you have to pay super through a clearinghouse now. And they'll deal with GST and things, so they'll allow you to run reports. So I think that's a really good, good software. The last one I know that I'm hesitant to mention it's a product called Reckon One. It's a very bare bones product. It's about $5 a month. I think it might add GST, take it to $10 a month. It's pretty cheap and cheerful, but again, it'll do the job. Certainly better than nothing. Yeah. Question?
Just for an idea, as an example, for one of the companies you said would have like an indefinite timeline. Poncho, which was made by Delve Interactive, they went under because they didn't have a deadline. They stopped their day jobs, and then they burnt all their money, and then they couldn't produce their product without asking for extra money. They still didn't have a deadline, so they were in debt and they haven't made $1 back from the game.
Yep. And that is a big problem, particularly because the market now is very, very saturated, and so your budget needs to include things like some expenditure on marketing, of some marketing. You've got a great game and no one knows about it, that's bad luck. So you need to have a think about what's going into it. Yeah, and making sure there's a bit of money left at the end is really important. Anyone else? No? All right. Oh, here we go. Sorry. Yeah, there we go. Okay, so this is a bonus tip. This is 0.6 out of the 5 hot tips. Is really talking about cash flow. So we touched on it earlier. This need to monitor what's going on within your business. Cash flow is an important distinction between profit. What will kill a business is cash flow. Profit, not so much. The reason that it's important is to understand the difference. Is cash flow is the difference between the amount of cash available at the beginning of a period versus the amount at the end of a period. So that movement in cash. Profit is about income that is being earned and expenditure that's been incurred. May not necessarily relate to physical payment of funds. You may have released a title and have sales on an Apple platform, but you're going to be waiting 2 months generally before you see any of that money. Now, that's an unfortunate way in which Apple tends to work these days, but you can go bust in that intervening time. So it's an important distinction to understand. The reason I'd highlight it is the statistics are pretty damning around cash flow, and I've put a couple up there on the screen. ASIC, which is the Australian Securities Investment Commission, who monitor all companies, have found that poor cash flow is cited as a factor in 41% of business failures, second behind poor strategic management in 42%. So that second point there, that 42%, that comes down to what we were talking about earlier in terms of taking it seriously and treating it with due care and financial management.
I was just going to add on to what you're saying about
Sure.
the waiting period with Apple, and it's similar with Steam. I don't know exactly how long it is, whether it's 6 to 8 weeks or 2 months, but I've seen several developers who are pushing to get to the release, and it's like, well, we'll make those profits straight away and be able to make the next month or so. And it's like, then they realise only at that point that they have to wait a couple months, and the business just collapses because of
Yeah. Yeah, and you get it. Look, there's good commercial rationale for why that happens, in that Apple are ensuring that they're covering their buybacks and all that sort of stuff, and generally probably filling up their bank account for a little while as well. But that essentially is something you're going to have to deal with. Yeah. Xero, who we mentioned earlier, there you can see how it's spelt. The Small Business Insights. This is a year old now, unfortunately, but 50.7% of small business had positive cash flows as of June 2017. So you think about the inverse of that, that's a little bit scary, right? Yeah, so a little bit damning. Now that is something that I think this industry needs to be very aware of, because, as I said earlier, your revenue cycle is flat, spikes up, goes back down again, and it's going to be flat. Your expenditure generally will be very consistent, allowing for some perhaps move in headcount and the like. That's what kills a lot of these bigger studios, is that their burn rate, they get a large number of people on, they're doing really well, they're completing the game, and then they run out of basically projects for people to work on, and that burn rate just blows a hole in their bottom line every month. So it's really important to understand that. You got one more question for me?
No, I was thinking of the word leniency, because what I was thinking about with my own cash flows, I was having that same problem where I was trying to figure out where's all the money being spent.
Yes.
So I calculated and weighed it up. This thing takes up more than 50% of my expenses, but these are going to be one-off expenses, and after a certain period of time, they won't happen for years to come, so I won't have to worry about them.
Yes.
So when you're buying a piece of hardware, that's probably going to be like 60% of your
Yes.
wage for the week.
The capital purchase, yep.
Yeah, and
Maybe
then
quite lumpy.
after that, you'll be keeping that 60% for something else.
Yeah.
So leniency.
And I think that's where it's important. You'll see this particularly, we see it a lot in Melbourne, because we've got a lot of grants through Film Victoria, that they'll actually require you to prepare a budget for the next 12 months of cash flow and actually outline what your expenditures are going to look like. So that's a really good thing, but unfortunately is only enabled because people are looking at it and saying, well, I need that as a source of funding. They go through that exercise, but it is really important. Yep.
Is it true that the majority of your cash flow of your outgoings is wages for games company?
Look, predominantly yes. Man hours is going to be the significant thing.
That's really the big one.
I have had a client whose company died as a result of contract arrangements that he had with a particular engine.
Okay, right.
He signed without sort of going into detail, he signed a license with a particular engine over in Europe, and the resulting obligations under that particular contract killed his business. His game was awful as well, that didn't help. But, I'm allowed to say that he's a client. One thing, if you have a chance, I'd encourage you, I think it was a GCAP a couple of years back, Ben Britton-Smith and Matt Ditton from Mighty Games, if everyone has heard of them perhaps. They did a really great talk of, I think it was 12 weeks of development or something like that, talking about their challenges in trying to essentially keep that cycle really tight. I'd encourage you guys to have a look at it. It probably gives you a bit of a perspective from a non-business sense as to some of those challenges, and they're funny guys. It's quite an interesting talk. All right, any other questions about cash flow? So I'll throw it open to the floor. There we go. And if anyone has any general questions that they would like to ask, perhaps that I haven't covered, or you've thought up one that you'd like to come back to now.
Grants. What type of grants are we?
Where, what, who?
Yeah.
Yeah. Yeah, good question. It's really unfortunate that Screen Australia was there for a period of time, and then the federal government unfortunately canned that particular project. I don't know what I was very disappointed personally that happened, as were a lot of my clients. One thing I would note, I'm not sure I'm allowed to say it, but I'll say it anyway. If you do have a Screen Australia grant, or you received a Screen Australia grant, they're generally cancelling your obligations under that, so I wouldn't be paying them anything back. You can get out of it. I have seen it done a number of times, so if anyone's in that camp, probably not. I didn't tell you that. Were we filming? That's all right. Otherwise, it tends to be state-based, unfortunately. So, as I've said, in Melbourne, we're very lucky to have Film Victoria, who've been quite supportive of the industry. I'm not familiar enough with what's going on here
We
in
don't know what's going on in South Australia.
South Australia. Yeah,
Apparently the fund disappeared from the website.
They've been frozen.
yeah.
Things
Under review.
So can we go to Victoria and pick one up there and
I would never encourage that. I mean, I think it's great that there's a big scene here, because I think you work better as a group, would be my comment. But maybe you should be petitioning your local member for what good that does sometimes. I think reaching out and talking to them is good. Yeah. Can I just throw one little tip in onto that? There are, I spoke earlier a little bit about R&D incentives. So from a tax perspective, there is that element. So for you guys that are doing tech work, you can certainly apply for R&D incentive. It's a two-stage application process. One is through what's formerly called AusIndustry. It's the Department of Science and Innovation, something else now. You apply there, they confirm the project. You're then able to treat the expenditure that you've got on developing the particular eligible activity under the concession, and it will enable a refund of money against that.
As a game. Sorry.
There's quite a bit of paperwork involved in that as well.
There is, yeah.
But you have to say, developing this thing with a completely new type of role-playing game or type of first-person shooter, and give some reasons as to what you were innovating.
And that's under technology.
Yeah,
It is.
then it counts as R&D, research and development. And
So-
you're just cranking out a boilerplate product, but you're breaking the mold.
So under the old,
Yeah.
yes and no. Yes and no. I think it is widely defined, and we do see it quite often utilised. And to be very clear about this, you're going to be lodging with AusIndustry, the body called AusIndustry, or what was formerly called AusIndustry. They'll tell you if you're stretching. So they're quite collaborative because they're encouraging participation. It's the ATO that comes and yells at you if you've done the wrong thing. But you'll find out for them. They can't fight the actual determination.
Okay.
Yeah. The distinction I draw there is, in the old days, people would develop an engine, so they'd be very focused on the core tech that sits behind it, and then they would treat that as the R&D activities, and then switch across to a title release, and that's essentially the game element. So if you can just draw the distinction there, if you've got an element of technology in a title that is then going to be reused and recirculated, you're very much going to be able to access that concession. The last one, really quickly, is EMDG. There's a great case study on the Austrade website where Half Brick up in Queensland applied for EMDG on user acquisition costs and were successful, and I have done that also with one of my clients, and that will allow a refund of 50% of the outgoing. So again, it is marketing focused. EMDG stands for Export Market Development Grant. It's totally about marketing Australian product overseas to international markets. This guy down here's had his hand up very patiently. Yep.
So for myself and income, while I'm working on game development stuff, I'm generally doing contracting.
Yes.
I work in augmented reality, which is R&D. I've been suggested that I get a boilerplate thing done, so I turn it to the client and say, you claim what you pay me on R&D, and I claim the work that I do on R&D. Can you do like a up the food chain kind of thing?
No, generally not, because the requirement for R&D to qualify is that you have license over that IP. So you own it, you're the owner of that IP. So you can't share it, so to speak. Yeah, they don't allow double dipping.
Just to go back about the grants,
Yes.
and specifically with state, and the joke about going over to Victoria. What if you have a team that's based all across Australia? Like, what defines where that team is based, all in what grants, state grants that you can actually apply for?
Yeah, the Film Victoria grants are designed to they're trying to encourage and foster the industry there in Melbourne, or Victoria broadly, but it's happening in Melbourne generally, and so that's where what they're looking for is essentially an influx of economic development into the state. They may well accept a team coming in from interstate and working locally, but I'd say you'd want to really evidence the fact that you're based there.
Right. I guess the way I meant to structure my question was, let's say it's a two-person team and one person's based in Adelaide and one person's based in Melbourne.
Yep.
Is the company has to be based in Melbourne? Or
Look, I don't want to put words in Liam's mouth. Liam Rout is the convener of the program over there at Film Victoria. He's very approachable. I'd have a chat with him about it.
Right. I guess I meant more in general, like law things or accountancy things, not just for Victoria in general, but for just state grants in general, or is it quite flexible?
Yeah. What you're going to find is the state grants are going to be very focused on the flow of income or business back into the state.
Right.
Yeah. So they will be naturally cautious of any split deals. Yeah.
So my question was based around the international costs and taxes around selling in international markets.
Yes.
Obviously, you mentioned EIN for obviously your Steam,
Yep.
Apple, and things like that.
Your platforms, yep.
Yeah, and obviously they've got the double tax agreement with the US.
Yes.
So is that something that's calculated on this end when you do your company tax, or is that something that's withheld from their end before they pay you out for your income? How does something like that work?
Good question. That's really dry tax technical stuff. But basically, there is a double tax agreement between a lot of different countries, and Australia obviously has, I think it's about 140 odd of them from memory of the total 200 odd different countries that are out there. They set out basically taxation rights, who gets taxed what, and in some certain circumstances, generally interest, dividends, and royalties. Withholding taxes can apply on those. So withholding taxes is where basically if you're in the US paying an Australian company, they would be obliged to withhold a certain percent, I think from memory it's 10%, on the payment that they make to the Australian company, and they pass that 10% on to the US government. Now, when you receive that money here in Australia, and you'll see this if you, particularly if you have any work coming out of, or you do any sales in Japan, it's probably the main one that I see. There's withholding tax on electronic sales there. That amount of being 5% generally is essentially an offset that you can claim on your Australian tax return. So you don't pay tax twice, you only pay tax once. Yeah. That's about as far as you want to go with that. Yeah. Don't enter into a royalty agreement where you're paying someone royalties overseas without considering double tax treatments. And for that, generally, you're going to want to come and see an accountant or maybe even a lawyer. Probably a lawyer. got a question? No, it's just a scratch of a chin. Anything else? Any other questions? Calling last questions. All right, well, look, if you do have any questions that you think of later, my contact details are up there. Feel free to reach out. I'm happy to answer any questions along the way. Perhaps one day you might even become a client of mine. We work with a number of interstate businesses, so we're mostly up the entire East Coast. Don't have anyone in Adelaide at the moment, so that'd be great. But having said that, look, feel free to shoot me a question. I would also encourage you to come across to GCAP if you get a chance. It's a great experience. I imagine that there's a few nodded heads that have gone along to it. You perhaps might see me there. And that's it. Oh, there was one other thing I'll mention is a guy that I do a bit of work with. You perhaps might know him, Cam Rogers. He's actually located here in Adelaide now. He's a lawyer that works in the games industry, so I'll give him a bit of a free plug. And I think you should definitely have a chat with him. He's quite reasonable to deal with. So if you've got any sort of legal type questions, you can find him. He's on the web. It's easy to find. Cameron Rogers. Cam Rogers. Yeah. All right, well, thank you very much for having me, guys.